Welcome back, guys. We've had some constructive action in the HBAR markets over the last week. I see a couple drivers that could push HBAR into the promised land. And though it's less likely, there's also a bearish scenario. So let's discuss and dig into the charts. Let's start with what I think is more likely, a medium-term move to the upside. Of the three legs of the HBAR bull case, I'm going to focus on two today. The first is the parabolic run general crypto markets can experience toward the end of a bull cycle. For both the 2013 and 2017 run, Bitcoin had a fantastic Q4 that topped out in December. In 2017, altcoins continued their run for several weeks after the new year. A similar run is my base case scenario, and if this happens, HBAR will certainly go along for the ride. The other way HBAR could push beyond dollar parity is if Hedera specifically has some good news. Some of those catalysts include big names being added to the governing council, new on-ramps such as Coinbase, Kraken, Gemini, or PayPal, announcements of exciting use cases, or as some of the Hedera leadership have mentioned, a step change in network use and transaction volume. Now let's see where we are and where we might go. A couple of weeks ago, we discussed the cup and handle pattern that was forming when we zoom out several months on the weekly chart. The handle was a bit deeper than I was initially thinking, but considering the volatility of the crypto markets, it's to be expected, and at this point, it really looks picture perfect. If we zoom in on the 4-hour chart, we can see how we form nice support at 30 cents, which happens to correspond with the 0.382 fib level. We had a nice recovery in the latter part of the week that ended with a test of historic resistance at about 42 cents, which shouldn't come as a big surprise. As of the time of recording, we are sitting a little under 40 cents. I'm not going to lie, that 4 handle puts me in a far better mood than the 3 handle. We could continue to form the handle by consolidating between 30 and 42 cents, and this could go on for a while, or we could break out. For a cup and handle breakout, first I want to see us move and stay above this trend line, and confirm by moving above the 0.786 fib level at 47 cents. Obviously, a move above the 100% fib level at 56 cents, which is close to the recent all-time high, will be the next area to watch closely. Beyond that point, we would be in price discovery, and if caused by the previously mentioned crypto blow-off top or major HBAR-specific catalyst, I'd be looking for similar price action that followed Google joining the Hedera Governing Council. We discussed this before, but to recap, price action similar to the post-Google trend could see us test the 3.618 fib extension at $1.68, followed by a pullback to about 82 cents, which also corresponds to another Fibonacci level, and consolidation between those prices. Now these price targets are taking my bullish scenarios independently. If Hedera has some serious good news, and we get a crypto blow off top, all bets are off, and we'll have to revisit my price targets. Okay, now that I have you all worked up, let's go over the bearish scenario. There are plenty of drivers out there that could see a deflationary impulse and a risk-off environment, which could negatively impact the crypto markets. An example is the continuation and contagion of the Evergrande situation in China or a black swan event causing a 2008-style crash. I think this is less likely, but still worthwhile to consider. If something like that occurred, we want to be prepared with some price targets to potentially accumulate HBAR. With crypto bear markets, an 80% drop always pops into my head, so I use that as a starting point. If such a crash were to happen today, 80% off the HBAR all-time high would put us between 10 and 12 cents. This corresponds with an area that was significant at the beginning of the HBAR bull run. If we go into a bullish scenario, and for example hit $1.68, then went into a bear market, I would use a similar methodology, an 80% drop from the all-time high as a starting point, and then find some additional support indicators to find a potential accumulation zone. Again, I'm leaning towards a bullish scenario first, but it never hurts to keep expectations in check by considering the market moving against us and how we would react. If you've seen the HBAR bull case, it's probably clear I'm far more of a fundamental investor, so you may be wondering why I'm also paying attention to the charts. I'll unpack that a bit. There are plenty of chartists who pay little to no attention to fundamental analysis, exemplified by a quote by statesman, financier, and trader Bernard Baruch a century ago. He said, "Show me the chart, and I will tell you the news." Fundamental investors, on the other hand, often think technical analysis is nonsense. I think HBAR naturally attracts investors that lean toward fundamental analysis, though we have our fair share of traders as well. My feeling is, technical analysis is just a way to anticipate how humans typically react to a given market condition, and unsurprisingly, that is very real and often predictable. It's all about human psychology. For example, if someone buys an asset and it falls, they may tell themselves, if it ever gets back up to that price, I'm going to sell. And when it does, they do, and this sets up resistance. On the flip side, if an investor buys and then the market jumps, they may think, if the price ever gets down that low again, I'll buy more. And they do, and this sets up support. The more traders or investors buy or sell at certain price points, the stronger the support or resistance becomes. What makes these and other technical indicators a stronger tool is they become self-fulfilling. If traders and investors are looking at the same support level to buy, it makes it that much more likely that it will actually become support. For assets that are prone to parabolic moves, tools like Fibonacci extensions can come in handy, and you can see from the last cycle on HBAR that key fib levels certainly appear to hold significance. The theory is the Fibonacci sequence is seen repeatedly in nature, so it may hold some significance in human emotion when investing. Though I think what has more influence is the self-fulfilling nature of everyone watching the same numbers. No matter the reason, as shown, it looks like the fib levels are important. Hit that like button and comment if you'd like to see this kind of market commentary. Thanks for watching.